Good evening, ladies and gentlemen, and welcome to the Brokers and Analyst Conference of Kaytex Fabrics Limited to KFL to discuss the upcoming SME IPO on NSE Emerge. Let us begin with the introduction of the management team. We have with us today Mr. Sanjeev Kandhari, Promoter, Chairman, and Managing Director, and Mr. Amit Kandhari, Promoter, Full-Time Director, and CFO. Socratimus Capital Private Limited are the book running lead manager to the issue, and Mr. Priyesh Jain, Head of Merchant Banking at Socratimus Capital Private Limited, is also present on the call with us. At this moment, all participants are in the listen only mode. Later, we will conduct a question and answer session. At that time, you may click on the Q&A tab to ask a live question. Please note that this conference is being recorded. Founded, founded in 1996, based in Amritsar, Kaytex Fabrics Limited is a fast fashion fabric solutions and manufacturing company specializing in premium digital printed jacquard, corduroy, and doby fabrics, along with the garments such as ready-to-stitch women's wear and accessories from wide variety of fibers such as cotton, viscose, modal, acrylic, nylon, linen, and polyester. The company combines technology, design, and traditional craftsmanship to deliver the textile and fashion products and manages the entire process from yarn to finished fabric production, ensuring quality and the ability to quickly adapt to the ever changing needs and trends of the fashion market. The company owns and operates successful labels such as Russia, Ktex, and Darbare Khas, in addition to being a trusted partner for the other apparel brands by providing quality fabrics and innovative designs inspired by global trends across wide variety of fabric types. Ktex Fabrics Limited is now looking at raising funds through the IPO route for capital expenditure for construction of additional warehouse facility in Amritsar, capital expenditure for construction of dedicated sales office in Amritsar, capital expenditure towards purchase of advanced fabric processing system for existing printing, dyeing, and processing unit in Amritsar, funding incremental working capital requirements and utilization towards general corporate purpose. The company is offering up to 31 lakhs 99,200 equity shares as a fresh issue and up to 6 lakhs 79,200 equity shares as of offer for sales, adding up to a total of 38 lakhs 78,400 equity shares being offered. The price band is set between rupees 171 to rupees 180, and the anchor book opened on Monday, July 28, 2025. The issue opens on Tuesday, July 29, 2025, and closes on Thursday, July 31st, 2025. The issue would list on NSE Emerge platform. I would now like to request Mr. Amit Kandari to introduce himself.
Thanks, Sahil. Hi, I am Amit Kandhari, Whole-time Director and CFO of Kaytex Fabrics. My role spans across sales, marketing, finance, and strategy segments of the business. Look forward to interacting with everyone on this opportunity. Yeah. Over to Sanjeev.
Hi everybody, I'm Sanjeev Kandhari, MD and CEO of Kaytex Fabrics. I look after designing, product development, operations, and technical aspects of this business. I'm happy to be here to talk through our business.
Thank
Can
you.
you, yeah, slide please? So we are the fast fashion company, opening predominantly in women's wear segment, focused on North India at the moment. So we are a fully integrated player with capabilities to process yarn to fabric to end products that is sold to the consumers. So we are deploying Dobby, Jacquard, and digital printing, then embroidery also to support our designing and the fabric innovations. So we are special. We specially we are in specializing in creating fabrics for a wide variety of fibers, including such as cotton, viscose, modal, even acrylic nylon, and we are using linen also because linen is in a very good demand right now. And even focusing on digital printing allows us to create customizable quality designs quickly and efficiently, perfectly suited to fast-paced or fashion design fashion requirements. Next, please. Basically, we are having a three key segments of our business, and the largest one is our own brands. Currently, we are running three brands, majorly Russia, Kaytex, and Darware Khas, and manage everything from fabric production to ready-to-stitch suits, then shawls, saris, and other accessories. These brands combine modern designs with quality, specifically in Tier 2 and Tier 3 cities of Northern India, to building a brand recognition. These are regional brands sold by a network of retailers and distributors. And our second segment is that is a brand enabler. Ktex Fabrics works as a trusted partner for apparel brands by providing quality fabrics and innovative designs inspired by the global trends across a wide variety of fabric types. With our strong infrastructure, we handle product development and smooth execution. So brands can focus on their core strengths and stay competitive in fast changing market. And the third segment is our unbranded segment. In the non-branded segment, Ktex Fabrics caters to bulk buyers, wholesalers, and retailers by supplying fabrics, garments, and accessories such as shawls, stoles. Ability to adapt and provide a scalable solution ensures we remain a preferred supplier in the competitive textile industry. Yeah. So Ktex Fabrics owns and operates successful labels that embody the spirit of innovation and growth. Russia is a premium ethnic wear focused on executive, digitally printed embroidery fabrics and garments. It specializes in unstitched suits, offering customers the flexibility to personalize their style with a custom fit. It's a well positioned to capture the growing market for high-end ethnic wear, attracting style-conscious consumers. Ktex is high-quality jacquard suits and shawls brands. blends it blends tradition with cutting edge of designing. We are making beautiful designs on our jacquard machines, which are currently in very hot demand right now. And then our third brand is the Darbare Khas, that is an affordable unstitched suits and stoles brand focused on value-driven ethnic wear and has a broad market appeal. We have a wide network of dealers and retailers through which we are selling our these products. We have a large designing team in house which focuses on creative, beautiful products for our customers. A high level selection of our products include digital printed fabrics, then jacquard fabrics, dobby fabrics, corduroys, and then garments. In each of these segments are hundreds of subtypes of fabrics that we are making. Our core strength lies in combining multiple technologies to be a single stop solution for all our customers. So, as you have seen, our products touch all the segments, and they are having the capability to do women's wear, men's wear, kids wear garments, and kid wear fabrics also across ethnic and modern wear. Next, please. So, I'm showing you a snapshot of some of our manufacturing capabilities. We are having a large manufacturing facilities spread over three distinct units, which are quite big. We also have a rooftop solar installations, which is covering our partial power load and helping us in having a lower carbon footprint. So our customer base is wide and highly diversified. We cover corporate and institution clients through our brand enabler segment, which ensures we have exposure towards tier one cities through their products. We work with clients including Reliance and Aditya Birla. Then we have a wide network of distributors and retailers, which ensures our exposure in tier 3 and tier 4, and even semi-urban areas. We have a strong brand presence there. We also supply selectively to uniform manufacturers and home textiles. We have recently expanded our exposure to direct exports. We had indirect exposure to global markets via sales to intermediaries, buying houses before, but now we are also doing direct export. Next, please. So digital printing as a technology is high growth and is taking away market share from the traditional printing. It is attaining cost parity with traditional printing and is expected to have material market share on printed fabrics. Basically, the difference between the digital printing and the traditional printing is such a game changer. That is why it is taking the place of the traditional printing. In traditional printing, you have to go through lot of hassles before you have to make the design patterns. Then you have to take to make the rolls, design screens, or even some rolls. A lot of trouble, and then there is a problem of the per lot. You can't have smaller lots. So once the customer goes for this digital printing, they are shunting off out their the traditional printing. That is why it is gaining such a momentum. Digital printing is a key focus for us. It is a technology that enables us to print directly on fabric. Actually, the lower MOQ is the turning point in this game. That is the main game changer. That is why it is helping so much. And because it has a lower MOQ and very quick turnaround, so that is why it is having solving the major problem of the textile industry, that which is the excess inventory, which is always troublesome in the textile business. And digital inventory is really helping it. Digital printing is really helping in it. As it is, it enables fast turnaround times. Manufacturing brands don't need to overstock and can make on actual demand in season. That is why we are extremely bullish on this and will continue to be pioneers, expanding its adaptability. So that's all from this. And now I'm handing over to Mr. Amit Kandhari to talk about the financials of this company. Thank you.
Thanks, Sanjeev. For the last financial year FY25, we did a revenue of 153 crores with a gross margin of around 30% and a EBITDA margin of 20% with a PAT margin of 11%. Our product revenue has grown at the compound growth rate for more than 25% for the last 3 years between FY22 and FY25. Our EBITDA has grown at the CAGR of more than 50% over the same period, driven by the higher share of our own brands and the digital printing. We have return on equity of 40% for FY25 and the return on capital employed is 33% over the same period, which is driven by our ability to manage the multiple technologies in-house. Our working capital cycle is around 145 days, split between 137 days of inventory, 85 days of receivables, and 77 days of payables. Next, as you can see, our growth has driven by digital printing, which has grown from 13 CR revenue of in FY22 to 75 CR revenue in FY25. It translates the CAGR growth of 78% over 3 years. Another key enabler in our growth is our own brands, which today represents around 50% of our own product revenue. Russia, our flagship brand, which has been growing at around CAGR of 59%. We currently have 55% of our products from garments versus 45% from the fabrics. Our brand enabler segment, which we work with other brands, has also grown at the CAGR of 57% over 3 years and contributes 33% of our product revenue. We have entered direct exports last year also, where we did 6.6 CR of sales and are actively looking to increase in this year with the same backs strong ground. Yeah, thanks here and over to the merchant banking.
Thank you so much. Thank you so much, Sanjeev ji. Thank you so much, Amit ji. So I'll just, from the merchant banking side, like to explain about more about the offer. So the offer size is 69 crores, 81 lakhs, 12,000 rupees. Fresh issue out of is up to 31 lakhs, 99,200. Offer for sale is up to uh, 6 lakhs 79,200 equity shares. Face value is of rupees 10. Price band is 171 to 180 rupees. Pre-offer number of shares is 1 crore 15 lakh equity shares. Post offer equity shares are around 1 crore 46 lakh 99,200 equity shares. The offer opens on July 29th, 2025, and the offer closes on July 31st, 2025. So this is going to list on the NSE Immerse platform. You can move ahead with this.
Yeah, we think it's a very strong investment proposition given the what we've discussed from the company side, given the single stop solution, given our own brands and across segment coverage from tier one cities to rural cities, a very healthy financial performance historically of a solid growth rates and higher margins. Our exposure and leadership in digital printing enables us to continue to have the growth that we're looking for in the margins that we are operating under. Our well-established distribution networks and low customer concentrations is one of the key features by design of the company, and the company is led with 70 plus years of experience across different segments, and we hope this is interesting for investors.
Thank you so
Yeah.
much. Sagar, you can start with the Q&A.
Thank you very much. We will now begin with the question and answer session. To ask a question, please click on the Q&A tab and on the panel, click on the raise hand button. The operator will announce your name and when it's your turn to ask a question. Please accept the prompt on your screen and unmute your microphone while proceeding with your question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, to ask a question, please click on the Q&A tab on the panel and click on raise hand button. The operator will announce your name when it's your turn to ask a question. Participants, to ask a question, please click on the Q&A tab on the panel and click on the raise hand button. Our first question comes from the line of Anand Matre, an investor. Please go ahead.
Hello, sir. I'm audible.
Yes,
Yes,
sir, you're
yes.
audible. Please go
Firstly,
ahead.
congratulations, sir, for your upcoming IPO. Hello.
Thank you so much.
Uh, Sir, my question is what differentiates us from the other players in upcoming fashions segment?
The, which player you're talking about? The market competitors in the same segment?
Yes, sir.
Look, we have an integrated unit. We are basically producing the fabric and then doing the printing, and that is the main cutting edge of ours. And the secondly, our major market is the northern India, and we are sitting in the northern India. So we are currently present where the major fabric is being sold. So we are always aware what the fashion is, what the trend is. So, and in ethnic women's wear, the main virtue is the speed, how you deliver. If you are able to catch the trend, you can earn anything you want, and if you are late, you can lose the money. So that is the major virtue in this issue.
And just to add on to that, this is Sagar from the finance team. We're also quite differentiated from a designing and product quality perspective, and our ability to manage different technologies with jacquards and weaving and printing and embroidery. Not a lot of players in the market are able to do that. So when clients and customers come to us, they get a single stop solution versus multiple people they need to go to. Hence, we are taking market share from our competitors as we go.
Yeah, sir. Thank you. Sir, my another question is what is your export expansion plan and which countries we are targeting?
Currently, we're looking at the Middle East mainly, and then we'll be also exploring UK on a preliminary basis.
Thank you, sir. That is from my side.
Thank you. A reminder to everyone, please click on the Q&A tab panel and click on the raise hand button to ask a question. We have a text question coming from the line of Mr. Akash Modi from M&M Enterprise, and the question is, what is the company's future planning for growth?
From a future perspective, our focus is to cement the positioning of our existing brands more widely in the markets and go deeper into products, and also focused on expanding our digital printing footprint from a capacity perspective. Those are the two key focus areas, at least for the next 2 to 3 years for the company.
Thank you. A reminder to all the participants, to ask a question, please click on the Q&A tab on the panel and click on raise hand button. We have a text question coming from the line of Nikhil Mistry, an investor, and the question is, what's the customer churn rate and how do you retain B2B buyers in a commoditized market?
So we have historically been able to grow our customer client book very successfully, and we don't see material churn at our customer base. We, in fact, have expanded with our customers going forward, and the reason that is, as I mentioned, given our multiple technology offering that we are able to provide, and products and the services that we're providing are not commoditized by any nature. We combining a jacquard with a digital printing as a capability. If you go in the market, there are not a lot many players being able to do that, and the designing and the product qualities that we're making are quite distinguished. So we don't really see commoditization as a key risk here. We are able to keep our customers, going forward. We in fact grow with them. We've grown multifolds with some of our key large accounts. And for in the unbranded segment, we definitely see some churn, but even there, given our cost leadership in some of the technologies, we are able to retain a fair chunk of those. We do not calculate customer churn as a number or track that as a number, so we don't have a number to provide as such.
Thank you. Our next question comes from the line of Mayank Patikar, and the question is, what is the current utilization rate of your production facilities?
Sure. Thank you for your question. Talking about the two key technologies that we have in the digital printing side, we've been adding capacity every year successfully. So our capacity utilization for FY25 was about 59%, just under 60%. And we've recently also added capacity this year, which has expanded that further. For our Jacquard's business, our capacity utilization was just under 80%. We've not actively grown that as a capacity in that segment, given our focus remains on digital printing for now.
Thank you. Our next question is from the line of Anirudh Sharma, an investor, and the question is, how do you manage the fast fashion cycle in terms of design, sampling, and speed to the market?
Well, it's a very interesting question, and I think that is the core of it, where and how we are winning in this market. Are from sampling to execution, we were able to do as fast as 2 weeks. Obviously, depending on products, it can even be shorter, a bit longer. Given with the market feedback that we get and the multiple design capabilities that we have and fabric capabilities that we have, we keep a lot of gray stock, gray inventory, gray fabrics in stock so that we can turn around fairly fast across different segments. So we are very quick in responding to the market trends, and hence is one of the key reasons we're growing the way we're growing. As Sanjeev also mentioned, being closer to customers, being able to adapt to the ongoing market trends is key, and digital printing being at the heart of it is exactly enabling all of that.
Thank you. Our next question comes from Vedant Ahuja from HNI, and the question is, what percentage of repeat customers does each brand have? Which brand shows the highest customer loyalty or retention rate?
Thank you for your question. We're not selling directly on e-commerce or online. We're selling through distributors who then selling to retailers. We do not have data to track repeatability of customers. However, one of the key facts that does point to a fairly high repeat rate is our distributors have been adding about volume, and we've been getting share of wallet from them repeatedly year over year, and they've grown with us and we've grown with them. And they continue to add their customers and also have a very high level of repeat at their end as well. So that does tell us that we have a fairly loyal customer base across brands, and in Russia more specifically, given the value proposition of those products, has really hit home with the key customer segment that we're working with.
Thank you. Our next question comes from the line of Hitesh Thakkar from Thakkar and Associate, and the question is, how do you manage raw material price volatility, especially cotton, dyes, and chemicals? Are there the long-term contracts?
Very interesting question. We do not have long-term contracts either on the supply side or on the sales side, and that enables us to be fairly hedged on both sides. So when prices go up on our raw materials, our pricing also goes up on what we're selling. We do not stock a lot of unsold inventory at our own end, hence we're able to pass through those to our customers, especially on the brand enabler segment. And on our own brand segment, we are able to manage that given our margin levels are fairly healthy there. We're able to price products based on the costing as well. So you're always looking at what it is costing on a very periodical basis and price of products so that we do not take a hit on the margins.
Thank you. A reminder to participants, please click on the Q&A tab on the panel and click on raise hand button. We have a question from the line of Garv Mahajan from RCS Advisors India Private Limited. Please go ahead. Mr. Garv Mahajan, your line is unmuted. Please proceed with your question.
Am I audible?
Yes, sir, you're audible. Please go ahead.
Given the volatility in fast fashion demand, how does Ktex manage inventory planning and avoid overproduction or markdown of prices, especially with constantly evolving customer preferences?
That's a very good question, Siddharth. I think we are very focused on our inventory, especially unsold ready inventory. Hence, our approach to the fast fashion market is, focused on having very limited unsold inventory. So we only make per demand. And digital printing, given what we mentioned initially, has a very fast turnaround time. We keep a lot of gray stock, and we're able to turn around those faster based on demand. So we don't make and project season to season, 12 to 18 months in advance. We're either making it on order for our clients, or we're making it based on demand that we see in season. So we don't actually specifically get in trouble into those issues. That is very typical for textile industry, and that is one of the reasons we're very bullish on the digital printing as a fairly game-changing technology for the textile industry. We think it will once and for all solve the key issue in the industry, which is demand projections and ability to manage demand and predict demand.
All right, thank you. I have another question.
Yes.
With such a trend-driven catalog, how frequently are SKUs refreshed or phased out? And what's the average life cycle of a collection or a product line before it's retired or phased out?
So we produce fabrics, these collections on a season by season basis. So there are 2 to 3 seasons we produce based on designing and products, and some of those carry forward to the next year or 2 years. But see, when you're looking at the product segment, it is very driven by the trending designs. Our base products have continued for us for the last 4 to 5 years. We've added to the kitty for sure, but very limited SKUs as such have been phased down as in that format. We obviously designing changes, patterns change, and we're able to amend our production accordingly. But we don't have, we don't work in the traditional textile way of producing very large catalogs and having large inventories. We adapt to what the colors and the trends ongoing, and we manufacture our collections based on those very close to the season.
Thank you.
Thank you. A reminder to everyone, to ask a question, please click on the Q&A tab on the panel and click on the raise hand button. We have a follow-up text question coming from the line of Anirudh Sharma, and the question is, how sustainable are the current EBITDA and PAT margins? Are they expected to improve further?
Yes, we expect those margins to improve further. We think we're, in fact, at the moment, a subscale player in the markets that we operate. We've not even crossed 200 to 50 CR sales mark, which is quite key ballpark number, from getting the economies of scale that we would require in this market. So we think they're very sustainable, and we're looking to grow them going forward as well. Yeah.
Thank you. We have a next text question coming from the line of Rajdeep Patil, an investor. And the question is, if digital printing demand slows due to fashion shifts, what's your fallback growth strategy?
Our focus on digital printing is not just digital sales. We're talking about overall printing market slowdown. We think we're falling on we're relying on our market share that we're taking from traditional printing as a total market, and it's still less, sub 10% as a total market. So we don't see an issue of growth at our end, even if the total market or total seasons printing as a portion of fabrics goes down. We think the markets that we operate under, the different types of printing and different types of markets that we operate under, provides a very good hedge for us to be able to work, because we work in local markets, domestic markets, corporate markets, export markets. So not all of those four segments would have the same cycle or same trend. And we feel our capacity is well utilized, and we've historically well utilized our capacity, focusing on different segments as trends come in and go.
Thank you. Our next text question is from the line of Mayank Patikar, and the question is, why have you chosen to invest in new warehouse and sales office in Amritsar?
Well, given the growth that the company has had in the last 4 years, our capital expenditure towards these two facilities is essentially debottlenecking some of our operations. We've run out of space to store the goods that we require. We are very limited on our sales office at the moment, catering to the wide number of distributors and dealers and customers that we have. So only to augment our production capacity that we've added over the last 3 to 4 years, it is prudent to add these capacities to ensure smooth operations and not using our capacities to the fullest from a distribution and logistics perspective.
Thank you. A reminder to all the participants, to ask a question, click on the Q&A tab on the panel and click on the raise hand button. We have a voice question, follow-up question from the line of Garv Mahajan from RCS Advisors India Private Limited. Please go ahead, sir.
As more players adopt digital printing, what differentiates Kaytex capabilities? Is it technology or supplier relationships or faster design to print cycles?
Sigav, it's a combination of technology and having availability of other technologies, and having ability to manufacture the fabrics, and a design team capabilities, which is enabling our success both in our own brands as well as enabling other brands. Given we have all the infrastructure in place, we're able to do a much better job servicing our larger corporate clients, and also come up with much better design and collections for our own brands.
Thank you. That's all from my side.
Thank you. We have a text follow-up question from the line of Hitesh Thakkar, and the question is, could you please share the reasons behind the promoters reducing their stake in the company?
Well, it's part of the fundraise process. We're expected to dilute a certain level, and we're diluting the minimum level that needs to be done for that level for this issue. And the intention is not to reduce stake going further for the next 3 years.
Thank you. A reminder to everyone again, to ask a question, please click on the Q&A tab panel and click on the raise hand button. As there are no further questions, I would now like to hand the conference over to Mr. Priyesh Jain, Head of Merchant Banking at Socratimus Capital Private Limited, for closing comments.
I believe Ramesh is not in the call at the moment, so we can conclude. I think thanks a lot for everyone for the time and effort. For any further questions, feel free to reach out, and we look forward to your subscriptions.
Thank you. Ladies and gentlemen, on behalf of Kaytex Fabrics Limited, that concludes today's session. Thank you for your participation. You may now click on the exit meeting to disconnect.